Kitco Mining's special coverage of the Bank of Montreal's 32nd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Hello, this is Paul Harris for Kitco at the BMO Global Metals, Mining and Critical Metals Conference in Florida. And I have great pleasure to be joined this afternoon by Joe Foster, Gold Strategist at VanEck's Gold Funds. Good afternoon, Joe.
Hello, Paul.
Pleasure to see you again.
Yeah, it's good to be here again.
We've spoken a lot over the years, or several times, and always a fascinating conversation because of your insights. You're one of the key investors into the gold space, particularly the sort of juniors and the developers. You've spoken and written about in the past the need for the junior sector, the junior gold sector, to consolidate. You want fewer companies to deal with better management teams. It seems as though your wish is finally coming through. Just before coming here, we're counting through the number of live transactions, and I think we've got up to about 8. Within those, a lot of those involve producers buying juniors, of course, but within that there are the first signs of junior explorers and developers, non-producing companies starting to consolidate, and you sort of really picked up on the Integra Resources and Millennial Precious Metals fusion or merger. I imagine you're very pleased to see this starting to happen.
It's something that we've been calling for quite some time. When you look at these junior developers, there's a lot of them in North America, in West Africa, South America, and the investment climate isn't great for these companies. I mean, a lot of them struggle to raise funds and raise capital. And I think one way to become more attractive to investors and raise the capital they need is to combine combinations that make sense, either regionally or locally. And in order to do that, you have to achieve a meeting of the minds where two managements come together with a shared vision for the company that's good for all shareholders. And I think that's been the stumbling block. So I really applaud Integra and Millennial for those managements to come together and create a company with more combined resources and the critical mass to move forward, raise the capital they need, and advance these projects.
We had George Salamis of Integra Resources on the show yesterday, and he was talking about certain elements of the deal. It's an all-stock deal. It's a no premium deal. And in addition to the primary development asset, it gives the resulting company a pipeline. So, as you say, a much more robust company there. Are you hoping that this will perhaps inspire other companies in the sector to perhaps consider similar things? Obviously, getting an endorsement from one of the key major institutional investors it's a call that's got to ring far and wide in the sector.
Yes, I mean, as analysts, we all know the properties that where there's synergies. We can all find synergies around the world, again, going back to how do you move these? What's the most efficient way to move these properties forward? Many times, it's not advantageous for a company to go in on their own. I mean, you need to build the critical mass. You need the expertise within your company to go to production. It used to be in past markets, junior could count on getting taken out by a larger company. You never had to think about going to production. Well, that's not happening as much in this cycle. So all of these companies, they need the in-house expertise to go through the permitting process, to go through the engineering designs, and ultimately take it to production if that's what's needed.
I think there's, echoing your sentiment there, Joe, I think one transaction that's on the table at the moment that we're seeing is B2 Gold taking out Sabina Gold and Silver. Sabina permitted their project. They've made a construction decision. They've completed a large part of the civil works. So it's about as de-risked as it can be, and then B2 came in with its bid. Again, is that a trend you think is going to continue? The bigger guys are only going to come in once that risk level's been really pared back by the junior company?
I think we'll see transactions like this periodically. I don't think this is the beginning of a frenzy or anything like that. I think all of these producing companies, they're looking at their they're looking down the road at the next, 3, 5, 10 years and, positioning their companies to be successful over that time. And I think that's part of why B2 is taking Sabina. It creates a very nice growth trajectory in combination with the growth that we're seeing out of West Africa within B2. We've had Sabina in the portfolio for quite some time, and I don't. Frankly, it's a great property. I don't know what took so long, but B2 is taking the plunge, and I think it's a great addition to their portfolio.
B2, depending on your point of view, it's a million ounce producer. So some people have it as a senior gold producer, other people have it as a mid tier. By and large, there hasn't really been a great deal of activity amongst the mid tiers. It's very few of them have been buying smaller companies. There certainly hasn't really been a great deal of consolidation amongst the mid-tiers themselves to perhaps get a bigger critical mass. Why do you think that is? Will that day come?
I think the mid-tier part of the sector looks a little different now than it has historically. We have what I characterize as large mid-tiers like B2 or Endeavor. Maybe Alamos is growing. And then you have smaller mid-tiers like the Eldorados and New Golds and Centerras of the world, and there's not a lot in the middle. What I think is needed is to fill that middle gap of mid-tiers, companies that are producing between 500,000 and 1 million ounces a year. And I think to do that, you need more consolidation. And again, I can see combinations of juniors. If you put 2 or 3 juniors together with development properties, then you have a line of sight to creating the next mid-tier gold company and filling that void.
That's, I would say, exactly the strategy that Equinox Gold has been following over the past few years. They've brought in together sort of 3, maybe 4 juniors, got a pathway, a line of sight towards about 1 million ounces a year. But they've also shown that that road is perhaps fraught with dangers as well, because you've actually got to finance and build, and you've got to have a whole bunch of other things go your way to be successful. So it's very tough.
Mining's a difficult business. I mean, there's lots of risks, a lot of moving parts. A lot of things have to go right to be successful. Then it goes back to what I was saying earlier. You have to have management in-house that's able to manage those risks, and then execution becomes it's key for as the company grows. You have to execute.
Okay, thank you. Now, looking at some of the capital raises that have happened this year, and this will perhaps feed into another driver to consolidate. There seems to be money flowing again into copper exploration, which has been absent the past couple of years. Money is certainly flowing into the exploration for battery and critical metals. We've seen a rash of new lithium companies, lithium juniors emerge. Given that there's presumably a limited pool of equity available, does that mean there's going to be limited capital available for gold explorers this year?
Well, it's been tough to raise capital for quite some time now. I mean, the gold market, while $1,800, $1,900 is a great gold price. A company can make a lot of money. The market is lackluster. I mean, investor sentiment towards gold stocks is at low levels. So that's one reason that the juniors have struggled to raise capital. And then I think the other reason is what you're mentioning here is that there's other options. You've got the battery metals, copper, rare earths. There's other mining investments that are attracting investment dollars away from these gold juniors. Okay, that's interesting.
Now, as you mentioned, the gold price is at historically very good levels, so some of the producers are making pretty good margins there. And they're also continuing to step up their returns to shareholders through dividends and share buybacks. As an investor, are you happy to see this, or is there a risk perhaps that they're giving away some of their balance sheet firepower, which may limit their strategic options going forward?
As an investor, no, we love to see returns, share buybacks and dividends. I think at these gold price, if the gold price was $200 or $300 or $400 lower, I'd say, yeah, things are tight. But at these gold prices, even though I just said the market's lackluster, these companies are generating a lot of cash. I mean, they can fund returns to shareholders and their exploration and their M&A activity, their development activity. All of that is easily fundable. All these companies, their balance sheets are in great shape. I mean, if they ever had to take on a bit more debt, there's plenty of capacity to do that. So I think, to me, a company should be able to do it all in this gold price environment.
Okay. Given that balance sheets are in a very good shape, a very robust shape now, is it valid to start turning the conversation away from shareholder returns perhaps to more of a growth paradigm again?
These companies have to look, in my opinion, many companies don't do enough on the exploration side, and exploration is tough. I mean, it's hard to, that's why gold trades for $1,800 now. It's very hard to find. Nonetheless, you have to have exploration success. You have to be good at acquisitions. It all has to come together, and I think companies could do more on the exploration front.
Okay. Now, let's talk a little bit about the metal itself. Gold's on a 4-week losing streak coming into the BMO event here. Why does there seem to be a lack of love for gold, do you think?
So if you could look at a gold price chart and see very clearly we hit new highs after the pandemic hit, and gold traded lower. And then we retested those highs when the war broke out in the Ukraine, and then it traded lower. There seems to be a ceiling on the gold price at around $2,070 an ounce. And I think the market sees these rallies and then they fade. They don't last. So I think the market needs to have some staying power. I think it needs to trade once it trades above 2,000 and shows it can sustain itself at those levels. I think that's when interest comes back into the sector and we get a lot more excitement around gold.
Okay, thank you, Joe. Now, we're at the BMO Metals and Mining event. What has been the highlight of the event for you so far?
The highlight, the food, the weather, and
the Kitco
interview. I've been meeting with some juniors that have that have changed their strategy. Like we were discussing earlier, it's gotten harder to raise capital. You can't count on getting taken out by a larger company. So we're hearing of juniors that are finding ways to go into production, bootstrap themselves. Maybe they've got a high-grade portion of their deposit that they go into production, generate some cash, and get the company going. So there's been some exciting stories around that.
Excellent. Well, Joe Foster, thank you very much for sharing your insights with us today.
All right, thanks, Paul.
And I'm Paul Harris. Stay tuned to Kitco for more from BMO.
Kitco Mining's special coverage of the Bank of Montreal's 32nd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.